crowdfunding and its tax implications. Today, we are talking about crowdfunding and its tax implications. So if you've ever thought about using this new method of raising capital to start up your new business or to develop a market for a new product, be sure to watch this video. So what exactly is crowdfunding? Crowdfunding is when an individual raises capital for a project, business, or charitable organization by seeking donations of any size from a large volume of donors. These contributions are typically made online through such crowdfunding websites as Kickstarter, Indiegogo, and Fund-A-Geek. So that begs the question, how will my crowdfunding contributions be taxed in Canada? Crowdfunding is such a new concept that the CRA has yet to establish a set of tax laws for funding raised through such means. Because of this, the CRA will be assessing the taxation of crowdfunding capital on a case-by-case basis. That said, there are 4 different models of crowdfunding, each defined by what the contributor expects to receive in exchange for their donation. And for that reason, each are subject to different tax principles. The 4 models of crowdfunding are the lending model. Supporters make their contributions based on their expectation that their contribution is treated not as a donation, but rather as an interest-bearing loan. Funds received shouldn't be taxable income because they are loans that will be repaid. Additionally, the interest paid on the loans will be tax deductible. The equity-based model. Supporters make their contributions based on the expectation that they will receive partial ownership in the organization they chose to fund. Funds received shouldn't be considered taxable income since they are paid as capital in the company. The reward-based model. Supporters make their contributions based on the expectation that they will receive a reward in the end, such as a discount or any other form of promotional award. The bad news is amounts that are received will be included on the income tax return of the recipient as income from carrying on a business. The good news is the recipient would be able to deduct expenses that were incurred with their crowdfunding campaign. How the donor would be taxed is dependent on the value of the reward. For example, a $10 advance copy of a DVD versus a $50,000 new car. The donation model. Supporters make their contributions altruistically with no expectation of receiving anything in exchange for their donation. No specific tax laws about this model have been released yet, although it's safe to assume that the donor would not be able to claim the donation credit, as crowdfunding campaigns are not registered charitable organizations. So here's the tip. Be sure to consider the tax implications of each of the 4 models of crowdfunding before starting your campaign.
If you like this tip and want to know more, drop us a comment below or visit madanca.com. And as always, don't forget to like and subscribe so we can bring you great tax tips every week.